Hi, this is Dr. Charlie Peterson. I'm the author of Dude, Where's My Profit? Today I want to talk about accruals and deferrals. Now, accruals and deferrals, in order to understand them, I'm going to use my ledger format from my program. If you're not familiar with it, please go to my website, www.dudewhere'smyprofit.com, and there's a free course video that you can view. Now, in my program, I've set up a ledger with the 5 general categories of accounts: asset, liability, stockholders' equity, and revenue. And the accounts on the left side of the ledger increase on the left side, or the debit side. The accounts on the right side increase on the right or credit side. All right? I'm going to go through several transactions here to demonstrate what. We'll start with an accrual. All right, let's get some cash in the business. So you go to the bank and you borrow $1,000 cash, and you give the bank a note payable for $1,000. All right, so there's your debit and there's your credit. Remember, every transaction has a debit and a credit. Now you take some of your cash and you purchased, and this is on September 1st, you purchased a 1-year insurance policy paying $600. So we're going to put $600 in prepaid insurance, and we're going to take it out of cash. All right, now I've made a timeline here for this problem. Here's year number 1. Here's year number 2. September 1st, we purchased the $600 policy. And the $600 policy, you see, spans 2 accounting periods. So we're going to need an adjustment to put the portion which belongs in this accounting period and the portion that belongs in this accounting period. Well, we know that $600 divided by 12 comes out to be $50 a month. So we're going to accrue or gradually accumulate 50, 100, 150, 200, and then we come to the end of our accounting cycle. All right, so now we need to make an adjustment for correcting the balances in both my prepaid insurance account and my insurance expense account. This account is overstated. This account is understated. So the adjustment will correct the overstatement and adjustment. So I'm going to decrease prepaid insurance by $200. And I'm going to increase insurance expense by $200. All right? This leaves us a balance of $400 in prepaid insurance. And these are the balances that are important. Here's the balance in insurance expense of $200. This is called an adjustment. This is called an adjustment. What we have done is we've gradually accumulated an expense not yet recognized. Now I should perhaps talk about the word recognized. Recognized means simply that the amount has not been put into the accounting system yet. With this adjustment, and this is your adjustment here, with this adjustment, we now have transferred $200 into the insurance expense account, and we recognize it in this accounting period. Now let's do exactly the same problem as a deferral. A deferral simply means we're going to defer or postpone the recognition of, in this particular case, an expense already paid or recognized. Let's say recognized. All right. So again, let's buy some money here. So we're going to borrow $1,000 worth of cash and put $1,000 into my note payable account. And now we're going to buy that $600 worth of prepaid insurance, but we're not going to use the prepaid insurance account. We're going to put it directly into the insurance expense account. All right, so let's put that in here. We're going to have insurance expense for $600, and we're going to have credit to cash, a decrease in cash for $600. You are now here, the end of your accounting period, and according to what we have recognized, we see that we have recognized an expense of $600, which is the total expense for both accounting periods. So what we need to do then is we need to take out the portion which has not been used up yet. In this particular case, $400. and we move that up to prepaid insurance, $400. Now you see, this is the adjustment. That's the adjustment. And let's balance out this account here. We have a balance then of $200. And you can see that we have postponed the recognition of $400 worth of the insurance that has already been paid for. So we have an exact same balance in these accounts. We have 400 here, 400 here. We have 200 here and 200 here. So we have deferred or postponed the recognition of this $400. Now, some companies, when they buy insurance, will put it into prepaid insurance, and they will end up with an accrual. Other companies will put it directly into the insurance expense account. All right, and we end up with a deferral. So that's simply how accruals and deferrals work. I'll be doing this with some other accounts as well. So thank you very much for listening, and have a good day. Bye.